Hello. Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. I am actually dialing in from India today. I'm right now in Calcutta. So for me, it's not morning. It's actually late in the evening. At any rate, as far as the format of the presentation is concerned, it's business as usual. We'll have slides from the presenters. We have 5 presenters, I believe, today. So we will, first and foremost, we will go through slide presentations, and we will not have any video on the right panel. So those of you who are familiar with the format and are expecting a video, please know that there will not be a video today. So 1 million by 1 million, as you probably know by now, is the only global virtual incubator in the world with a mission of helping 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. We are on the web at 1mby1m.com. This is our 210th free online roundtable for entrepreneurs. So as you can tell, we've been doing this for a while, and we've worked with lots and lots of entrepreneurs. We have a pretty deep insight into what's happening in your lives, those of you who are working in the technology and technology-enabled services and industry as entrepreneurs in various parts of the world. Actually, we work with entrepreneurs all over the world, so we have insights into a lot of ecosystems. The event is being recorded, and you will have the recording available after the show. If you want to live tweet the show, please use #1m1m. And you can follow us on Twitter at 1mby1m and at Sramana. The YouTube channel is where you'll find the roundtable recordings. It's 1m1m Roundtable is the name of the channel, and we'll also put it on our blog. Now, after the 5 presentations, the slide presentations are over, depending on how much time we have left, we try to end the session at about 9:30 a.m. Pacific time, so just about 90 minutes. So depending on how long it takes us to go through the slide presentations, if we have time, we will let you call in and discuss your situations or any issue that you want to discuss. And I will put these instructions up again at that point. And meanwhile, Maureen will also share the dial-in instructions and the numbers with you. So why don't we dive right in? We are going to start with Srinath Ranga, Idea Solutions LLP. Srinath, if you could unmute your line, that would be great.
Great, Sramana. Good evening to you from Chennai, and good morning, everybody. This is Srinath Ranga from Chennai, India, and I am the co-founder and principal consultant at Idea Solutions. So before we get into the product, a little background. I have about 20 years of experience, of which about 11 years in the US. I was in California, Pennsylvania, and Texas in software and engineering and allied services. And recently, we've also been accepted, Idea Solutions, that is, been accepted the IBM Software Catalyst program just a couple of weeks back. And then last week, we also got into the IBM Global Interview Program. So just listing some more places how we can use services and IBM's brand. The status of the product, we are in beta currently, and we demoed it through many of the people that I know, and some of others who have interest in the product, and we got good quality feedback. These have been validated to some extent. Some changes were asked or recommended, and we are in the process of getting done with those. So this is a space that we are attempting to disrupt, to capture the business optimization for small and medium business and IT services. You see the space, the opportunity comes in the CRM system.
Can I interrupt you for a second, Srinath? Your audio is extremely unclear. Are other people having difficulty with audio? I definitely have difficulty hearing you. What is the setup that you're dialing from? Are you dialing from a Skype line or a phone or cell phone?
I'm dialing from a Skype line.
Yeah, can you dial from a regular phone line? I'll move on to the next presenter. Why don't you work with Maureen, and she'll help you dial from a proper line so that we can hear you. We cannot hear you properly. Okay. I cannot work with you in this mode of audio.
Okay.
Okay? All right. Okay, we'll move to Beth Race. Beth, if you could please unmute your line.
Okay. Can you hear me, Sramana?
Yes, your line is clear. Please go ahead.
Oh, great. Wonderful. Thank you very much for letting me present today. I'm Beth Race, and I'm from beautiful Casanova, New York. I'm the creator and owner of Eco Baggies. It's an earth-friendly alternative to plastic sandwich bags. If anyone would like to know more about our product, they're welcome to, could you go back to the last screen? Just reference any of the links you see on the first screen here. Eco Baggies is a new, Eco Baggies is a new environmentally friendly alternative to traditional plastic sandwich bags that will eliminate 3% of the country's annual plastic sandwich bag pollution while gaining 3% of the industry sales by the end of year 5. We've all heard how plastic grocery bags have been such a blight on our planet. But what about the 3 to 4 plastic sandwich bags we put in our lunches every work and school day? Those have a tremendous impact on our environment as well. Our findings show that 26 million plastic sandwich bags go into landfills every year in the United States alone. And with that figure, it's no wonder the plastic sandwich bag industry is estimated to be $1.3 billion annually. Slide 3, please. Eco Baggies are perfectly positioned to fill the current gap in the sandwich bag industry. Our plan is to get them into markets where the main grocery and supplies buyer for each household does his or her weekly shopping, thus making them easily accessible to consumers. Next slide, please. Eco Baggies are a paper alternative that have some unique properties. These properties allow them to absorb a certain amount of natural levels of moisture, fat, and grease in food without it passing through the paper. The paper they're made of has been in the food industry for over 40 years, so it has been well tested. Eco Baggies have a unique design. They're patented because they are the first low-cost, high-volume paper alternative to those traditional sandwich bags that is resealable. They can be used very much like the plastic sandwich bags we are all used to, so it's making it easy for a consumer to make the switch. They're different and yet very familiar to the consumer. Most of the benefits of our products include that they are resealable, recyclable, reusable, compostable, and biodegrade in 2 to 5 months compared to 50 years for the traditional plastic sandwich bag. They can be found where you do the rest of your weekly shopping, and unlike other wax and paper bag alternatives, their resealable flap keeps your food secure. Eco Baggies have pleated size for larger food items as well. Next slide, please. This is the kind of product that needs a movement. Hopefully, for us, someone has already started one. Using LOHAS, which is Lifestyles of Health and Sustainability Segmentation, we've been able to determine that our product will successfully grab the attention of 83% of the relevant market, all but the unconcerned. Every other segment is interested in or practicing green behaviors on different levels, so they may find our product interesting. Slide 6, please. Our plan is to have a 2-tiered marketing approach. First, we'll draw interest from and educate the consumer, primarily the household shopper who is responsible for supplies for the 9 million school children and 17 million U.S. workers that brown bag their lunches. The other track will be to approach other businesses that will sell our product through direct retail grocery stores and e-commerce sites. Something happened to that slide there. Okay. Eco Baggies will approach the market with a strong financial model. We will realize a cost of goods sold of 3 cents per unit and then turn around and sell it for 6 cents per unit. After sales of 21 million units for year 1, we will realize a revenue of just over $1 million with a gross margin of $630,000. Next slide, please. Not sure what happened here, but something happened to this slide. However, we calculated our valuation using 2 methods. The first column we used figures from our current version of this plan, and in the second column we used a method based on Gust.com's version of startup valuations method.
Yeah, I think all of this is kind of useless, so don't worry about it. Let's not worry about valuations. Valuations is whatever you can get from investors. I don't think that's something that's worth discussing here.
Okay. So we've just got to get out there
and get
noticed.
The thing that I'm most interested in, so hold on, the thing that I think we should focus on right now is how are you going to get the business off the ground, or have you already got the business out of the ground? Where are you stage-wise?
We are pre-revenue. However, we do have 2 local companies that are interested and have pre-orders with us, and they're checking in with us regularly to see where we are with the production. And we also have 2 distributors, larger distributors, who supply medium to large grocery store chains who are also interested in our product when it's available.
And what is the timeline to get the product available? Do you have, are you able to fulfill those orders?
Right now we have a smaller manufacturer in Libertyville, Illinois, who is able to supply us with small amounts at a higher cost, where we'd like to get our costs down. And so we are working with a company in Germany, Garant Machinery, which actually builds the machines that could make our bags in high volume and lower cost. And they have 3 customers here in the United States that would just have to add 1 piece onto. There's a configurable machine that would allow them to put 1 piece on the end that would allow them to make our bags. Since it's a brand new product, there's no machine out there right now that makes our product the way we need it made. But we do have the ability to get it made. We just need to get the manufacturers on board with us to, to have faith in our product and have faith in our company to move the product into
And what does that entail? To have faith in your company, to have faith in your product, what does that entail for them to want to do this for you?
I'm not really sure, and I think maybe that's what I need to sort of explore a little more. I think because we are a brand new company, we're a startup, there may be some question marks on there.
That's exactly why I'm asking you these questions. I think, if you put so many hurdles in getting to the first prototype or the first product, it's too much. If you want your manufacturer to go buy new machinery to service your orders, and you're not even real company yet, you don't have any credibility or track record in the market, I don't think they will do it. So you're going to have to, at this stage of the game, you're going to have to accept a higher cost product, and kind of, unless it destroys the economics of your business model. I know you're working in a very, small, small ticket items. So are they asking for a manufacturing cost that destroys your pricing?
The current one, I believe, would not be in keeping with what we need to have in order. Yes, it would probably destroy our current business plan model.
So it destroys your business model, basically. If you have to work within the current available infrastructure, it's going to destroy your business model.
Yeah.
In which case, you need to go find an overseas manufacturer somewhere who can do it. Otherwise, I am not sure how you're going to get this thing off the ground.
And that's been my motivation for presenting to you. Is I was wondering, how do you see advantages to doing businesses overseas, and where would you recommend we try to start off with, since it's something that I am so unfamiliar with? I'm trying to get hands on.
I have no knowledge of who are the manufacturers in your market, so you need to do your own research. Wherever you can find a manufacturer that can operate within your business plan constraints, I will never, ever recommend any entrepreneur to work in a model that destroys the core business model. So you cannot start a business that is by design broken. Somebody is streaming echo into the call. Can you please mute the line?
Oh,
better?
Sorry, I didn't understand.
Yeah, okay. The echo is gone. So, Elizabeth, this is something that you have to keep in mind. You cannot work with a manufacturer whose cost structure does not align with the business model that allows you to be profitable. You cannot do business if you cannot make a profit. That is not a business. So that's one constraint you have to impose on yourself in selecting a manufacturer. Second constraint is you cannot expect, because you're not a credible business yet, you cannot expect a manufacturer to make any additional machinery investments. That is just not going to happen. You're wasting your time if you're thinking that that's going to happen. It's not going to happen. You're going to need to find. Yeah, go on.
I'm sorry. I was going to say our approach to that has been that we have an economic model that will allow us to purchase that piece of machinery for the business, and we would then rent it back to that business for $1 a year, which would allow them to do the maintenance and upkeep and perform the production.
And with what are you going to purchase? How much does that machine cost? With what are you going to purchase that machine? Do you have capital?
Yes, we have people ready to purchase a piece of machinery for us if we can find the manufacturer. Currently, we've gone through one of the 3 manufacturers. We've worked with them. They produce a larger size bag, and so it would be too much of a change for them to go to a smaller bag. They do sort of bread size bags, and ours is more of a sandwich size bag. So they were not interested in that from the standpoint that it would be too much of a change for them to production line.
Yeah.
And then the machinery, the gentleman who is working with us concerning the machinery itself has us in contact now with a company called Specialty Paper in Fort Worth, Texas, that does bags our size. And so it's a matter of, I think, being in contact with them and working with them on how we could put this together to make it beneficial to both of us. They already do make the sandwich.
Cost?
I'm sorry?
How much does this machine cost?
It costs €35,000, which is, roughly 50,000 US.
That's a fair bit of money. Someone is just ready to put this up?
We have investors who have, or pre-investors, I should say, people who are very interested in seeing the business get off the ground, who are ready to put in a certain amount of capital for us to purchase machinery to make it happen.
Okay, well, I'm just skeptical about that. So if that is the case, then you're ahead of the, what I would think I would assess this business to be in.
Yeah, I've been working on this business now for 6 years, building it from really the concept to where it has come this far. I think we're exploring the different opportunities should these 3
But that's not a good sign. If you've been working for 6 years on this business and you still haven't got it off the ground, that is not a good sign.
Well, I've been working on it part-time. As I've been working full-time at another job, I've been building everything here I've been working in my spare time to get it as far as we've gotten it. Everything is ready for production. We just need to find the manufacturer. Our other option is also to go to New York State, and they have a big program now where they're trying to bring businesses and jobs into New York, and we're prepared to approach them and see if it's something that we could actually start in New York, since we already have the machine manufacturing contact. We would be able to possibly start the business here in New York. So we're looking at different avenues, and I think I was trying to figure out how to, gain the confidence of the existing manufacturers, if that's an avenue we take. We're also looking at the possibilities of going overseas, and then the third opportunity would be to try and start something here in New York ourselves, with either an existing manufacturer who has a HEPA facility waiting for us, who would be willing to allow us to put the machine in there and then benefit their company and build employment in New York. So we have a 3-tier approach to, getting the production up and running. I think I'm just trying to find out.
3 tiers and see which ones come together. I don't think we can offer anything further on this.
Okay. Thank you very much.
Right.
I appreciate your time. All right. Thank you. Bye-bye.
Harsh Malik, you're up next.
Can you hear me?
Yes. Please go ahead.
Thank you, Sramana. Thank you for your time and for the invitation. The name is Harsh Malik, and what I'm going to talk about today is a personal health platform. Next slide, please. A quick review of what the problem or the situation is. life in the US, in India, and all over the globe is increasingly becoming complex with more temptation, more lifestyle choices, more food choices, more traveling choices. And in my opinion, there isn't a platform, and I'll explain the concept platform, there isn't a platform that allows any individual to look at, roughly speaking, how am I doing today? How am I doing last week in terms of my health? Not necessarily a medical perspective, but a very consumer-friendly view of my general health. That's the problem. In my opinion, this kind of a platform does not exist. The concept behind the solution is technology is becoming cheaper and is being increasingly adopted, so we should be able to think of a technological solution to providing this kind of an information, to providing this kind of general health awareness. Very obviously, the biggest hurdle is not a lot of people are really concerned or aware of personal health as a factor, to the extent that not a lot of people are aware of the simple concept of what you eat impacts your health. This kind of awareness still has to be built in, but I am confident, as we see going down a few slides, that there is an audience for this concept, and the audience will just keep increasing. Next slide, please.
And where is that conviction coming from? What validation have you done on that?
Yes, I will go over that in a few slides down the road.
Okay.
Very briefly, just to provide a statement, it's a technology platform that provides the consumer with a graphical, easy to understand. The focus is on easy to understand views of general health data. It's based on wireless, wearable, and mobile technology. And I think what will set us apart is the user-friendly graphic visualizations and the whole concept of making it consumer-centric and not necessarily a medical platform. The value proposition is, this is the best way I could put it. I'm not really good at putting this on slides, but the best way I could say it is just know wherever you are. Life's becoming complicated. Just know where you are in general health status on your terms within the context of the lifestyle you desire. The solution can be presented in 3 phases. Capture certain health information and lifestyle information. You use any means possible, and those means could be anything from eating healthy and exercising and dieting and yoga and whatever you want to do, really outside the purview of our monitoring platform. But you do whatever it is you want to do. You monitor it using our platform. Potentially, you can achieve a certain optimal state. And in the third phase, you maintain the balance between the health that you need to support the lifestyle that you desire. Our specific products are wearable devices, tablets and screens for, there's a little bit of story behind why I want to put in a tablet and screen and sell it as a product. And the rest of them are software services. The revenue is from the device sales. The tablet and all the screens can be part paid, part free, part motivation thing. The advanced services will be paid. The simple health awareness, basic elements, a few charts and graphs telling you how much you've eaten, what you've eaten, how much you exercise. All that is essentially intended to be free. Next slide, please. Very quickly, the market as of November 2013 is projected to be 58.8 billion, and specifically the word monitoring has been used. Mobile monitoring services will account for 65%. This gives me the first vision. This gives me the first vision into putting it into layman's terms. Use a smartphone and figure out what's going on with yourself. This concept, this idea, has traction today, and this traction will increase. Next slide, please. And my next slide go into the actual TAM, the total available market. I've kind of divided that into three parts, and once again, I have to emphasize here, I'm not really a professional marketing person. It's one of the places where I do need a little bit of help, but essentially what this means is the people who have known conditions, and diabetes is just an example, will want to monitor themselves. Once again, will want to is there's a question mark around that, but potentially everyone who has a known condition, for example, people with diabetes, the 6 elements that we are capturing, the 6 health elements that we encourage our users to capture, actually give our users a fairly good understanding of where they stand in consumer language. At the same time, they will provide the medical professional with another set of data which will tell the medical professionals statistically where the patient stands, so on and so forth. The rest of the slide talks about some statistics that I have collected from the website that I have mentioned.
But
all of them.
Aware of the fact that there is quite a bit of, there are plenty of products already in the market, especially in diabetes, for instance. There's a lot of products already in the market, right?
Yes.
Monitoring products.
Yes. I do, and I will get to that in just a minute. The next marketable segment, the first marketable segment was people with known conditions. The next marketable segment is people with preconditions. And, excuse me, maybe we don't need to spend so much time on this one. It's just that there is a lot of gap there. And the third marketable condition is anyone who just wants to know how he or she is doing. Now, to address your question about have I done any customer validation or have I thought about about the competition? The thing is, Sramana, we've been really looking at the market, and we know that there are a lot of people with a lot of devices who do health tracking. In short, there are so many devices to do so many things. Two things make us different. One is we intend to come up with 5 or 6, we have 5 or 6 health elements, but the intention is that these are things that can be captured within the privacy of your home using your devices, and our presentation is in a way that makes sense to the consumer in layman's language. We are not necessarily getting into things like oxygen levels in blood, even though there are devices that actually do that, because I'm not entirely sure that makes a whole lot of sense to normal day-to-day wife or a teenager or just a husband who's got a job and who's got a family to look after. So we are trying to make this, the design is to make this consumer friendly. Yes, at a certain level, we have features that will bring in all the statistical information and the precision data that the doctors can look at, but we don't see a product out there which can tell you from a quote-unquote a 360-degree perspective how you're doing. Excuse me. Applying this to the concept of to the problem of diabetes is just a side issue. It could be a diabetes. As a matter of fact, out of the about 100 people who are actually using the site right now and about 1,000 people who are registered, there are a few people who basically just told me, Harsh, as long as I'm not paying too much for this, I don't mind just putting in my data once in a while just to make sure that I'm within an acceptable range, because I have to travel a lot. I have to eat stuff all over the place. Excuse me, all over the place. So at the moment, I have a website. I have given demos to endocrinologists, cardiologists, administrators here in the U.S. I've actually talked to the chief endocrinologist at Chennai.
So Harsh, my suggestion to you would be to pick one area. You have all these different segments which have each different kinds of behaviors. If you go back to all these, you have diabetes, you have people with stents, you have people who want to reduce weight. These are very different motivations. And then you have different stages. You have diabetic, you have pre-diabetic, precondition, you have blah, blah, blah. I would say pick one segment where you are getting good response and really go deep into, find a statistically significant number of consumers to survey and to talk to and really define a product. I think my sense is you kind of, and this may be perfectly fine for the length of time that you've been working on it, but in terms of where you go from here, I would suggest you choose one particular segment, whether it's someone who has a condition or if it's a precondition, but choose one of those and choose a particular condition or precondition, and then go build your, validation case and the, product definition and everything around that, and follow the methodology. If you choose to follow 1M, follow our methodology, otherwise follow somebody else's methodology, but you need to follow a proper validation methodology and get to a minimum viable product.
Perfect. As a matter of fact, I am going to join up today. I'm going to pay my the fee and join up today 1M, and exactly that's exactly what I think I should do. At the moment, I'm in the process of.
In that case, follow the basically go through the positioning module and go through the validation module right away, and basically, structure your entire next few weeks or months around that methodology and follow it closely.
Perfect.
Okay. All right. And I don't know the answers to these questions, but you will, as soon as you start following the curriculum and following the process, you will be able to answer these questions, or we together would be able to answer these questions, because these questions cannot be answered in a vacuum. They have to be answered with data, and that's the process that we're going to follow and create the structure around it to make the right decisions on how to get your company, how to build your company, basically.
You got it. Thank you so much. I appreciate that.
Okay. Yeah. Okay. We have Doug Lawson next. Doug, would you please unmute your line?
Yeah, there you go. Well, good morning, and thank you for the opportunity to spend some time together today. I'm Doug Lawson. I'm the co-founder and president of Kingdom Trust Company. I left a career in banking 5 years ago to start Kingdom Trust Company. We are an alternative asset custodian. Let me define what that is. If an investor would like to make an investment into anything other than Wall Street, they would work with a Kingdom Trust Company to keep it in a tax-deferred retirement account for the purchase of things like real estate, precious metals, private equities, hedge funds, to make promissory notes and mortgages, leases, and those kinds of things. So, the Separation IRA is an extremely versatile investment vehicle that is greatly undereducated in our country today. The key reason is because a typical broker relationship, those folks can't get paid on those assets. They want to keep everything in a stocks, bonds, mutual funds, ETF type portfolio. But with the volatility in the marketplace over the last 15 years since we saw the dot-com bust of '99, the wild swings in valuations, the crash of '08, there is a lot of interest in the investor space to get into alternative assets and things people actually understand, whether it's investing in private companies with people that they know or into real estate that they can drive by and see. They want to take their retirement funds and to be able to do those kind of things. So we built a company specifically designed to help and facilitate those transactions. As a trust company, we are regulated exactly like the banking industry. We chose South Dakota because they've become the situs for trust companies like ours in this country. Regulators have a very deep and in-depth knowledge of what our product looks like and how it works in the marketplace, and so they understand what we're doing and how we're trying to help our clients. So our company, we wanted to talk about our value proposition. It was very important for us to be very client-centric. We wanted to focus around the end client, who is that investor out there who wants to do something different with their account and to diversify it, their portfolio, particularly so that they won't have they'll have uncorrelated returns to Wall Street. So if the market crashes, the rent check on the real estate still comes in every month, and so it provides.
And what is that segment? How much? What segmentation have you done on that segment? What is the profile of that client? If you were to dissect and position this product, what is the profile of that kind of an investor?
Okay. The average self-directed IRA account is about $80,000 to $100,000 in total assets. It will generally carry about 10% of that, so we'll say $5,000 to $7,000 in cash on hand. So that's the profile. They'll have about 90% of it invested. That client will typically have 2 to 3 assets. For instance, they might have a private equity, they might have a real estate or two, or precious metals. I mean, and it's the truly that decision of the client. That's the self and self-directed. As a custodian, Kingdom Trust is a passive, non-discretionary custodian, meaning that we don't make the decision for the client. We merely facilitate the process. So if that client has $100,000 in an old 401k, 403b, defined benefit plan, or some other qualified vehicle, they can do a rollover into Kingdom Trust, and that money remains qualified, and they'll put it in a traditional SEP, simple, or Roth IRA, depending what their situation is, and then they'll make the decision for that investment if they want to go into
question here. Have you
Sure.
done any validation of this segmentation that you just presented? 100,000, let's say just for round numbers, let's say it's a $100,000 IRA account or a 401k account. Is that a validated assumption?
Well, I mean, that's a direct number from our client. We're 3 years old at this point. We've come to the startup, and now we're into a growth phase.
So how many clients do you have of that profile, $100,000 account profile?
Yeah, we're about 5,000 clients on the self-directed side,
Okay.
but we carry about 40,000 clients that are, and those others are in traditionals, meaning stocks, bonds, mutual funds, and ETFs. So we do a custody solution for a broker-dealer that is where that comes from. So we've got quite a client base. At this point, we're in all 50 states in the U.S. and 2 foreign countries. We've also picked up an institutional piece with the passing of Dodd-Frank. Private equity firms and hedge funds have a need to have greater transparency and accountability, and we serve in a role there where we act as custodian. Typically, we run private equity funds in the smaller $25 million to $500 million range that don't have big relationships, and we act as custodian in those relationships. And what we do is basically we do the underlying reporting of the assets held by the private equity to the underlying investors. And so we work with the fund and the end investor to make sure there's transparency, and that was in an effort to avoid having any bad actors in the industry, Bernie Madoff rules.
Okay.
And so,
All right.
yeah, but the security market,
That answers my question. That's what I was trying to get at. Is that a blank assumption, or is that something that is a validated assumption? Your answer is it's a validated assumption. That's fine.
Yes, ma'am. It's definitely validated. The average account, too, what we found through our research, we spent 1.5 years in research and development trying to understand the industry and looked at a number of other self-directed IRA custodians in the country to understand the paperwork, what their disaster recovery plans look like, what their client services were, and that kind of thing. Very much researching exactly what you're talking about. So we tried to validate as much information as we could. Could I go back to the slide that started with the words target? I think it was the 3rd slide. Back one more. Yeah, the global alternatives market. Next slide. There you go, right there. The global alternatives market, in a worldwide perspective, is growing rapidly. The need, the want, the desire for alternatives. Of course, the advisor industry is trying to put in more of like a alternative mutual fund strategy, where they're doing things there to have an easy solution. But the clients are really asking for alternatives, and so it's globally it is just growing ridiculous as you see some of the numbers there. Right now, it is projected that IRAs could surpass the $9 trillion mark in the next 5 years. When we started 5 years ago, it was roughly $5 trillion, so it would be a doubling of the number of assets in IRAs. There's about 47 million IRAs in the U.S., best information that we can derive, and about plus or minus 3% of those are truly in self-directed alternative assets. So the growth percentages are enormous. People wanting alternatives, and the opportunity to educate and to, even if we took that number from 3% of the total IRAs and made it 6%, it would be a phenomenal increase to all the custodians in the country. So there's definitely an upside. And the big reason that there's so much upside, number 4, they're the baby boomers who are retiring and turning 65 at a rate of 10,000 folks a day. When they retire, typically most of that money finds its way into an IRA vehicle. So they want to take and probably pull themselves out of the market to reduce volatility. And if they invest in some things that they know a little bit more about, they'll have a greater level of comfort, help them sleep at night, and also diversify their portfolio. So that's the kind of work we do. Now, how do we get that out there? We work with a lot of registered investment advisors in the country.
Yep.
A registered investment advisor is a trusted resource to that investor. And if the RIA as a fee-based advisor understands the alternative asset space, they can make recommendations into those end investors. So what we do is we made a very easy technology-friendly support system for advisors to use, and we train them and educate them every day ultimately to find ways to get to that end client that they're in front of and they have the faith and trust.
What is the business model for you and so the RIAs are fee-based? What do you take a percentage of their fees, or how does the fee-based structure work?
Sure, no question. What we act as a held-away custodian. So if they're with a typical custodian like a Schwab, a Pershing, or a Fidelity or others, they'll do their traditionals through there typically. And what they'll do is they'll have a held-away account at Kingdom Trust, and we report back to that RIA so that if they put their client into an alternative asset investment that they've recommended and they take the fiduciary responsibility, that asset held at Kingdom can still count into their total assets under custody and management by the advisor, and the advisor then can charge based on their total assets. We get an annual fee for holding custody on behalf of the client is what we do. So it's a small fee, and above it, it's typically $195 and some small basis point type fee. For instance, a $100,000 account will put you in the $350 to $400 range a year. So it's not terribly expensive to have alternative assets in your portfolio. That all the fee information is on our website. We're very transparent. It's very cookie cutter. It's not a lot to hide there. So, but that's our model.
So in the interest of time, let's go to your questions so that I have another 2 more presenters to work with. So tell me what we can help you with. What are you working on that we can help you with?
Right now, we're in definitely a growth mode. We have doubled our revenue in the last 2 years. We've budgeted another 60% increase this year. And right now, what we're trying to do is to manage that growth. And having the capital to continue to stay out in front and be a leader within the industry is very important to us. And so I think right now I'm looking for any way. It's most important for me to educate. That is solely what moves this product forward and our industry forward, is to find ways to educate the advisors and the end clients on the opportunity, because right now, like I said, the majority of the people, 85% of the investors in this country, will go into a broker-dealer's office and will kind of say, here's my portfolio, what do I do with it? And it's important that they know all of their options and not just the standard, here's a mutual fund that I think would be good for you option, because a buy and hold strategy.
So you need to create a comprehensive marketing strategy to scalably educate the RIA market. That seems to me like the lowest hanging fruit, correct?
That's correct. That's correct.
And do you have such a strategy in place now?
I'm sorry, I missed that.
Do you have a strategy in place to market to that audience?
We do. We've got a team of people and a marketing group and 2 business development folks as well as myself. That what we do is we take and we're trying to make contact into all the RIA groups within the country that will utilize alternative assets. And we've got a team we got a gentleman in Chicago, one in Cleveland, one in Boston, and then I'm in Murray, Kentucky. So we're kind of spread out. We're trying to find more bodies across the country that continue to spread that message. And what we like to do is work with folks who are already going into the RIA shops and selling product. If we could team up with them, they would allow us to have greater coverage.
So if you were to work with us, this is not the strategy that I would recommend. We would recommend a much, much more technology-driven strategy for marketing and educating the RIAs.
Okay.
that's my only comment on what you've just said. I think your business plan seems pretty robust. I think your business premise seems pretty robust, but I think your customer acquisition strategy or go-to-market strategy needs work.
Fair enough. More technology.
Okay. All right. So I'm going to move on to the next presenter. If you have more time, and at the end we can come back to your business, but I still need to tackle several more. So, and we have 45 minutes left. So thanks, Doug, for the time being. Ken, we're gonna work on yours next. So if you could please unmute your line and tell us what you're doing with Ankota, that would be great.
Okay, great. This is Ken. Are you able to hear me or no?
Yes, I can hear you.
Okay, super. So yeah, let's advance to the next slide. Okay, yeah. So Ankota. Well, I'm an original co-founder of Ankota. I actually acquired the company via asset purchase just in January of this year. So now I'm the founder owner. So what we do is we provide software. It's in the cloud and on the web and mobile. And the real focus is for managing elderly care. And our vision is really to focus on keeping people out of the hospital. That's ultimately, when you're in the hospital, it's the most expensive place in the health system, and your satisfaction, quality of life is lower. And actually, especially with elderly people and all the fact that there's other diseases in the hospital, being there is people actually sometimes get sicker. So our goal is to keep people out of the hospital. We're focused on two products that are shown here. The one on the left is really about managing home care. So at this point in the U.S., the average life expectancy is into the 90s. And what the home care management product does is it helps a company that is providing caregivers to manage their entire operation. It's in the cloud, lets them put in their information about clients and caregivers, their care plans, schedules, tracking, billing, payroll. So really it's kind of an online, cloud-based service that lets them manage all the operations. There's about 25,000 companies that we could sell to. Presently we have around 20 of them as our customers. The monthly recurring revenue on these is about $1,000 a month. And, and then I have a new product, which is about care transitions management. What this is that under Obamacare, they're basically transforming the U.S. healthcare system to be more accountable. So the providers of care are, really asked to share in providing the best outcome at the lowest cost. And one of the things they put in place is to penalize hospitals if somebody is discharged from the hospital and then they're readmitted. And basically they're kind of benchmarking the hospitals and seeing who's not doing well. And what we've introduced is a product for managing that transition of care and making sure that people, when they leave the hospital, if their care is managed well and if the readmission is avoidable, that we help them avoid it. And then just down to the bottom of the page, the value proposition we offer is that they could run their company with less people in the back office. We provide HIPAA compliance for internationally. What that is really protecting the safety of individual personal health information. We also streamline their billing and payroll. And there's also some fraud in the home care industry, and all of our systems make sure that people are where they say they are. They have audit trails, so if they get audited, there's no question that they have provided all the services that as claimed. So that's what we do. Jumping forward to the next slide, technology. It's a .NET C# application hosted in the cloud in a HIPAA compliant way. Kind of going across the bottom, we have people access the system on the web. Our non-medical caregivers, these are fairly low-paid people in U.S. dollars. The average is around $12 an hour, and so they don't have a computer. What we've done is we've built a voice response application where they dial from the client's home, and we use caller ID to verify that they're there. We also have a smartphone app that's starting to be adopted as more and more people are getting smartphones, and that validates that they're at the client's home using GPS. And then for skilled clinicians, we have an interface that runs generally on iPads or laptops for them to do their more technical nursing notes. We built that with HTML5, and we use it basically, you have to be online to bring down your documentation, but then you can work offline at the point of care in the home. And just the last thing on the diagram is we do have external interfaces to to pull information in and out of other systems from our clients. That's kind of the technology stack. You're kind of shifting into customer acquisition. I'm really focused, as I can't remember if I mentioned, but I said on the previous slides, the average customer in Ancoda is paying about $1,000 per month in monthly recurring revenue. And yeah, and the customer acquisition strategy that we're using is really inbound marketing. We want people to find us, so we're offering educational content, blog articles, videos, and the like, and we really want people to find us online. We're also posting our content on things like LinkedIn groups, and want people to find us. And once they download a piece of our content and share, let's say, their email address with us, then we nurture the lead. We try to email them some more educational content and things like that to try to bring them on board. Actually, as I said, I acquired the company in January, and I just put some new mechanisms in place. And what the graph on the right is showing is that, I'm not sure if you can see the gray area in the lower right, but this is what people who are essentially becoming a lead, filling out a form and sharing some information with us is kind of up 500% since I've started using this approach. Looking at the next slide is kind of a drill down into, this is for our Care Transitions product, which is a new product in the market. We are bringing them to this landing page. We have a 2-minute video that kind of explains the opportunity, and they can watch that for free. And then we also tell them about the white paper that is accessible on this form. And then if they fill in the simple form on the right, they get access to the white paper, and that starts the nurturing campaign. And then on the right-hand side of the screen, I've shown how that works. It's fully automated. We use some website and marketing software called HubSpot, and basically what happens is once they've downloaded, let's say, this white paper, that the next day we send them an email that shares some information about the National Transitions of Care Coalition, and about a week later we send them more information. And we're always there's always an opportunity for them to ask for a demo. And so that this is the approach that we've taken in marketing. And so far, like I said, we're up 500% in leads, and we're starting to see the request for demos trickle in.
Good.
Great. Shooting to the next slide, as I mentioned, I was part of the previous company. I did this little before and after slide. Really the previous regime was focused on, really pitching the company to investors and trying to get their money from funding sources. I'm really focused on, on trying to get our money from the recurring revenue. The previous regime had, a CEO, a COO, a CFO, a chief medical officer, a chief technology officer, and everybody was looking to get funding and building out their teams. In the new regime, it's me as the founder, and everybody is really focused on doing work. The previous company was losing $70,000 a month. I'm actually losing about $5,000 a month, with the changes that I've made. But we are trying to move that in the right direction. They were very much focused on, solving new problems, kind of a consulting model, whereas I'm really trying to focus on, the monthly recurring revenue and focusing on specific products and selling them, using the web sales instead of enterprise sales, and, kind of going for volume and solution selling.
You're doing all the right things. First and foremost, focusing away from investors and focusing on revenue is absolutely in line with the way we operate, so that's very good. And even if you want to raise money, that is the best way to raise money, actually, is getting customers and revenue going.
Fantastic. Okay, so jumping to the next and last slide. So I actually did, show my team on the right. That's me in the top. Nancy next is my head of sales. Carmen leads technology. Then Jed is helping me with the marketing, social media, and Sharon is my customer-facing trainer and doing customer support. Everybody's, well, except for Carmen and the programming team, everybody else is part-time, and, and that sort of thing. And so I guess the help that I'd love is, some feedback on how, we've changed some things around. I guess what I'm finding, one area I'd love some advice is that I really do need to figure out how to, fill the top of our funnel. What we've done so far is, we've put together this content. We've mostly found a few LinkedIn sites where people are coming our way, but I feel like I've gotten what I'm going to get out of those few sites, and now I have to, figure out how to reach out more. This is an industry of kind of technology laggards. They're not really strong in social media, I have a few ideas
You're going
there.
to need to have a go-to-market strategy, absolutely. There's no question. And it's great that you've gotten this far with without an outbound marketing strategy, but you are going to need to put together the outbound marketing strategy at this point.
Right, exactly.
Is that your question? The should we incubate question, is that the question that you need to learn that from somebody? Is that the question you're asking? Or
well, I guess
what does the should we incubate question mean?
So I guess that, there's different, incubators, here in the Boston area where we are, and of course there's 1M, and, so one of the questions is, can we get help by affiliating with incubation? I guess, primarily, 1M could be hopefully a fantastic
So if you hold that question, I will go over how we work with entrepreneurs. We do both incubation and acceleration. And I will go over, we have one more presenter. I'm going to finish that presentation, and then I will spend, 5-10 minutes going over how 1M works with entrepreneurs. Why don't you listen to that segment and ask me questions after you've listened to that segment, yeah?
Okay, fantastic. And then just to kind of run through the financials, we're currently about 5 customers short of break even, but we are, I have around 20 live customers, and I guess, to be honest, the very first roundtable that I listened into, the feedback you gave to the first presenter I heard was, with a few tweaks that they could become $1 million business. We're currently about a $220,000 business, and looking to move forward, and hopefully there's some tweaks that you could offer.
I have no doubt, based on what you've presented, I have absolutely no doubt that we can, coach you, guide you to become $1 million business, and much more than that. You have enough enough of a market opportunity here to become a much larger business. If you want to do it in bootstrap mode, we can work on bootstrap mode. If you want to do it in an accelerated pace with investors, we'll have to create the strategy for that, and I still need to do some more analysis to figure out, what would be the product roadmap that would make it a venture financeable business. But I think you have a very good start. So there's no question that we would be able to help you accelerate this business.
Very good. So,
all right, so hold on. Let me finish with Srinath, and then we'll come back to more of the 1M work, because, modus operandi kind of questions.
Very good. Thank you.
You're welcome. All right, Srinath, we're going to go back to your slides.
Good evening, Sramana. I hope you're able to hear me better now.
Yes, lot better. Here we go. Go ahead. Your first slide is up. Go ahead, Srinath.
Okay, I was just talking about the company before getting into the product. So we just got accepted to the Software Catalyst and the IBM Global Entrepreneur Product Program, and trying to find out how we could perhaps try to utilize that. This is the space that we are trying to be in, between the CRM and when the opportunity comes and gets to project management. That's when typically from a delivery or operations perspective, it goes into black hole where people try to do the estimation, find out who is available to get this project done, find out what skills are available, whether the people in a particular city, and if so, is he already on he already on a project, and if they can be pulled out, is this a team or a B team going to do this project, what revenues are going to come out of this, what's the long-term forecast, so many questions, and typically this usually takes 3 to 4 days to get this done. What we are attempting to do, if you can go to the next slide.
So, Srinath, before we go to the next slide, just based on the diagram that you have up on the screen right now, one thing is not clear to me. I understand when you're talking about resource management and figuring out what resources available that can go onto this project and in what city and so forth. There's basically a human resource allocation solution. What has CRM got to do with this?
Oh, okay. The CRM part is the opportunity. So typically the salesperson or the pre-sales person would have the opportunity into the CRM, Salesforce or Microsoft Dynamics or any of the other hundreds of CRMs out there, and then that gets pushed into, okay, we got an opportunity, we got a project, or this is an extension of the current project, and that is where the CRM part comes in. the opportunity.
I see. So you are talking about professional, specifically professional services or professional IT services organizations managing their human resource allocation on a per project basis.
Yes, Sramana.
Yes. Okay. Got it. All right. Let's go from there.
Okay, so what we are having here is so why is this needed? Why do operations and delivery heads need to view capability, availability, cost, and even more from disparate systems on a single canvas? Typically, this is the way it works. You got the opportunity coming in, either somebody phones, emails, or sends uploads the opportunity on their CRM system, and then they say, okay, we got a 4-member possible project for about 6 months, typical, and we will need these skills, Java, Oracle, or some other skills, and so these are the possible revenues out there. This is the requirement. So let's get this started. And then what happens is it just goes to a delivery or a project person who then spends a couple of days analyzing what is out there. Typically, he has his own Excel sheets, or he gets a data dump from various different systems, the HR system or the project management system, and even the ERP to look at some cost or other things. And then they do some analysis and say, okay, this is a tentative team that can go out for this project. This is a possible quote. This is estimation. And then at the end of 3rd or 4th day, this is the sales or the pre-sales person is then given the feedback. Okay, go ahead and quote this much, and we'll get started on so and so date. We are trying to attempt to optimize. Is able to get this done in about 30 minutes. What we have built is already built. This application already built is a data store, and where we have the cost and the rate sheets and the project-related information already, so to say, grandfathered in the system. And then we will be able to then we would need to do a much better skill mapping of the resource availability, and then possibly integrate to their project management systems to then have all this information on one canvas, so they don't need to go around asking so many people and to be able to pull the data from different systems.
Okay.
So what we try to do is the cost, the skill, the resource, and even the process, because we basically crunch the entire time, and then use existing legacy systems instead of trying to buy or bloated systems. Next slide, please. So this is one area where we are trying to see an opportunity for us to trying to so to say poach from people who are dissatisfied with the current PSA SRP systems, service resources planning systems, where they pay about $25 to $30 per resource per month. So for an average of 1,000 resources company, easily it can be about $300 to a year, plus additional for implementation other services $500,000. And apart from that, there are smaller companies who can't afford these costly systems, and then there are other companies which use a hodgepodge of small systems, human capital management or resource management or project management, and which do not want to move to a full-blown system and put all their eggs in one basket. So what we have tried to do is de-risk the entire thing in terms of a 4-phase process. First, we found that when the feedback was, okay, how accurate is the current skill database? So we want to focus on the skill database, try to get it more accurate from typically 60-65% that is up there to about 90% plus. We have built some intelligent tools in terms of being able to parse the data, we are able to import the data from LinkedIn and Facebook, and we also built some Excel upload tools so that we are able to push the data from their existing HR and other talent management systems. And so that is the first step. And the second step is then integrate, and then we give a basic search at this point so that they're able to do a better job of finding out who's got skills where. And the second step is to be able to pull the information on the availability of the resource, and so that would mean integration with their current project management systems. So this is what we are preaching again and again. No need to buy new systems. We essentially use the data that is already there in your systems and be able to deliver much of the output that you want. And the third part is adding the cost data, and then fourth step is to be able to have intelligent decision support analytics for them. So this is what we have in terms of competition, like you correctly surmised, Sramana. The PSA and the SRP, the big PSA, SRP are out there in the market. And then we have got resource management software who can then combine with some project and skill mapping, and then they're able to deliver. And then the third one, which I have not added here, are some of the analytics companies which deal with a lot of other verticals, and with a little bit of work and with some domain expertise, they can probably move into the IT services also. And from focus perspective,
have you done a bottom-up TAM analysis based on what you're saying here, what you want to do, the price point at which you want to sell this project, the competition and so forth? Have you done a bottom-up TAM analysis?
We've done a little, Sramana. It was a bit difficult, but this is what I have done so far. So please feel free to critique. We have looked at the total amount, total number of IT companies out there in the market between 550 to 5,000 who would need such a kind of system. There are about 9,000 so small and medium businesses in the US and about 1,500 in India. And then we pulled out the reports in terms of how many of them are using such PSAs or such systems, automation systems. About 40% in the US do not use any form of automation from the point of where they get the opportunity to the time they send out the quote. And then so a little bit of another 20 to 25% of them use a hodgepodge of inbuilt systems, Excel sheets, and all that. So if you look at the total PSA market that is there, the top vendors, that is the NetSuite, the Autotask, ConnectWise, they are not very huge in that sense. They are between the $100 to $400 billion. And so the entire, in the terms of the professional services automation software, the total revenues for them is only about $2 billion or so. But that's and I've not included the BI, the business intelligence folks in here, because some of the companies use the BI tools also to be able to get the reports and the analytics.
Okay. And how many customers do you have right now? You're saying that you're targeting 10 paid customers by March 15. Do you have any customers yet?
No, we are pre-revenue, Sramana. So we got the beta out for private beta.
That's fine. I'm just looking for a status, status check, like what stage of the company building process are you in? Okay, got it. So, right now, I don't think you need to work on alliances. You need to first and foremost get, as you said, I would even say that. So, how far are you from having a minimum viable product in place?
We have the product there, Sramana. The first two phases we are in a position to execute. We had some feedback in terms of what some of our potential customers wanted, and the feedback from people in the delivery and operations. So we had to make
and what does your pipeline look like in terms of customers? Like if you were to look at your pipeline, how many customers do you have that are piloting and evaluating your software right now?
We do not have anybody in a pilot. We've been talking to a few companies. There are about 2 companies that through my contacts have agreed to do a pilot, Sramana, but they were asking for some of these small tweaks, which we are in the process of completing.
I see. So, part of the positioning exercise is going to be figuring out which customers are likely to come on board as early adopters. Where are you getting the traction? So you presented some sort of a relatively high-level segmentation. I would like to understand the segmentation in a lot more detail so that we can cut through the chase and get to those 20, 50 customers who fall in the specific segment that really have pain and are willing to adopt the solution. And that's an exercise that we need to go through to figure out where do we go? Where is the right place to penetrate this market? Because, as you presented just now, there are 1,500 IT-enabled services companies in India, US 9,000 plus. So this is a fairly large audience, and it has sub-segments. So I'd like to understand where in the sub-segmentation can be the right place to, hit the market for a market penetration strategy. That's something I haven't worked on this business yet, so I don't know, and I will guide you on how to do that process, but that is what I would do next in very short order, so that you don't waste a lot of time chasing people who are not going to adopt your solution and just going to cost you a lot of sales time and resources and energy, whereas the ones that are the most likely to adopt the solution, we need to find that sweet spot very quickly.
Absolutely.
And all these other questions will follow along from there.
Sure, Sramana, and we would definitely be interested in knowing more about the premium service that you offer.
Yeah, okay. Why don't we go there actually next? It's a natural segue. I will spend about,
Thank you very much.
You're welcome. I'll spend about 8 or 10 minutes explaining to you how we work, and if you have any questions, we'll take questions after that. So, folks, if you like what we are doing, I would very much request you to refer entrepreneurs to us, because our mission of helping 1 million entrepreneurs reach $1 million and beyond in annual revenue, we can only achieve this if we can find serious entrepreneurs and a lot of serious entrepreneurs to work with who are willing to do the heavy lifting needed to build a business. Building a business is not some overnight little thing, It's a very long, intense, deeply stressful process. And only, nutcases like us, right, go for that kind of process. So, if you have the mettle, if you have the resilience to go that path, to travel that path all the way, that's the kind of entrepreneurs we are looking for, so that we can put our resources behind you and make you successful. So given that, the resources are all at the website. So we are 100% virtual incubator and 100% global incubator, so you will be able to access all our resources at the website, which is 1m-by-1m.com. And again, the mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond, build $1 trillion in global GDP and 10 million jobs. Now, on that, the first layer of resources we have is our blog, which is extremely, rich in content. So if you're not following the blog, and if you're an entrepreneur, I would strongly recommend that you start following the blog. There's a ton of free material there already, and it's both deeply inspirational as well as educational. The next layer of resources is our book series, the Entrepreneur Journeys book series, which we have published 8 of these books, and all 8 are available on Kindle as electronic books, and then the first 4 are also available as physical books from Amazon. The blog is at SramanaMitra.com. You can also find it at 1m-by-1m.com. This is what the website looks like. You'll find lots of interesting videos that explain the program as well. These roundtables, we have done 210 roundtables as of today, and these are available pretty much on a weekly basis. I'll give you the schedule for the next few weeks at the end of the session. And, we've been doing this for a long time. We have a very, very deep understanding of what kinds of issues you're dealing with. And as a result, we have lots of tricks and strategies and tactics with which we can address the kinds of issues you're dealing with. You can register for any of the roundtables. At the website, under the free public roundtables page, you'll find both the calendar and the registration information over there. The premium program offers extensive methodology guidance. So some of you I talked to you about go-to-market strategy, some of you I talked to about positioning, some of you we talked about validation. All these pieces, these are commonly encountered issues in early stage entrepreneurship, and all of those we have distinct methodologies for. And you will get complete, blueprints, template-style blueprints, as well as lots of case studies to understand, learn, and develop your own strategies in each of those categories. So the curriculum we offer in form of video lectures and case studies. I'll go over that in a moment. We also help you with business development to the extent we have in our network potential customers, channel partners, investors, media, analysts, advisors. We will connect you, very generously. Our Rolodex is very deep, and we very generously give you access to that Rolodex. It's a massive Rolodex, and we give you access to that Rolodex very generously. And then we have these kinds of essentially strategy consulting sessions, but we have members-only private sessions where we do the actual interactive mentoring work. We help you with financing. If you're looking at a business that is a financeable business, and by following our methodology, if you've got all the ducks lined up as we require, we will also introduce you to investors and help you through with the financing negotiations and everything. And then finally, we have a lot of clout in the media, and we help you access that clout and get coverage. Now, if you go to our website, you'll find the $1 Million Club, which is where we introduce some of our successful entrepreneurs who are above $1 million in revenue, and some that are on their way. Now, quantifying the 1M value equation, this link is the ROI analysis of 1M itself. So for a $1,000 annual membership fee, we believe that you get $375,000 plus 5 to 10% equity worth of value. So I suggest that you take a look at that and see all the vectors along which 1M provides value and what that translates into if you try to access that kind of value in the open market. And we also give you lots of orientation material to understand and learn how to use the program effectively. It is a largely self-learning program aided by these kinds of interactive sessions. So you have to be very comfortable with online learning, which I imagine all of you are building in some form or the other, a technology company or a technology-enabled service company. So I can't imagine that you would not be comfortable with online learning. But so it is an online program, 100% virtual program. I recommend also that you do the 1M self-assessment. It has very interesting and important questions that you have to ask yourselves about your business. And where you have knowledge gaps, the premium members also have access to the curriculum modules that address each of those topics and help you plug your knowledge gaps. Our goal here, essentially, if you sum it all up, is to, basically take you through a full entrepreneurship MBA focused on early stage technology-enabled services entrepreneurship without having to go to school for, 2 years, without having to take out big loans. A Harvard Business School would cost you $85,000 a year. We don't want you to spend that kind of money just for a $1,000 annual membership in a very compressed, very efficient format while you're already building your business, or you're thinking of building your business. You can just use 1M in parallel. There's no opportunity cost whatsoever. It's very pragmatic, practical, hands-on. Let's build your business kind of thinking. The whole thing is around let's roll up our sleeves and build your business kind of mode. So there's lots of information. Go through the website. Whatever you need to learn, you will find most of that information you will find on the website. And we also will introduce shortly, Maureen will introduce you in the public chat to Irina Patterson, who is going to be your contact from 1M to answer any questions you may have. So if you have any questions, you want to talk to somebody on the 1M team, just contact Irina by email, phone, or Skype, and she'll be happy to answer all your questions. And we have tons of video FAQs and all kinds of things. Now the curriculum is actually very interesting. We've been developing case studies of successful entrepreneurs since 2006. We've had over 600 successful entrepreneurs, really successful entrepreneurs, participate in this program. And they have shared with us how they have mitigated the common challenges that all of us as entrepreneurs face at some point or the other in our journey. And what we have done is, because we've also been doing these mentoring sessions, these roundtables, like the one that you're attending right now, for also for a number of years. We have done 210 of these, plus we've done a lot of private roundtables over the last 3 years since the 1M1M program has launched. We have a lot of understanding of what your issues are. So we have made a continuous, sustained effort to extract solutions to your issues. And today we have a very, very powerful curriculum that will help you learn, essentially not just from me, but from over 600 entrepreneurs who have traveled your path and are offering their, pearls of wisdom effectively through this program. And what I've done is I've synthesized in video lectures some of the, top lessons, and then offered you case studies where you can actually hear from those entrepreneurs themselves. So that's what the curriculum is, and that is one of the cornerstone strategies that we have followed to, get a lot of entrepreneurs up to speed and really, you start 1M at one level, and I can guarantee you, if you follow our methodology, you will emerge out of 1M at a much more sophisticated level than where you started. Our methodology is lean, capital-efficient, bootstrap startups. Even if you raise funding later, our strategy is bootstrap first, raise money later, because that is the only way these days you can raise money, unless you're a serial entrepreneur with track record where you can go to your, people whom you've worked with before, and they may be willing to give you money on a concept. But for most entrepreneurs, the solution is to bootstrap first, validate, get a validated business together, and then go finance that business with with investors. Now, I told you earlier that we do a lot of coverage of our premium members. If you go to the press page on the website, you will see this what you have on your screen right now, the coverage of 1M1M premium members. You'll see how much coverage we generate for our portfolio companies. It's really interesting because it's extremely difficult for young companies to get any coverage whatsoever in the media unless you have a major financing, to announce. So we use our relationships in the media, our clout in the media, to be able to give you coverage. And we also give you access to our social media channel, not just Twitter, but we give you access to our Twitter, Facebook, LinkedIn. We have massive presence on each of those channels, and we give you access to all of those. We give you access to our blog. We cover you on our blog, which is also a pretty major destination online. A lot of investors and customers, channel partners monitor the site. We have an affiliate program. So if you're working on entrepreneurship development anywhere in the world and you're looking to plug into Silicon Valley, we have an excellent affiliate program, and we're very happy to partner with you. The next two free roundtables in April are going to be April 10th and April 24th. We have a little bit of gap because 1 week, so we have some travel in this period which overlaps with the roundtables, which is why we had to cancel a couple of roundtables. But in May, we're going to be back every week, again, back to every Thursday morning. So you'll have plenty of opportunities to come and present or discuss your issues in one of these sessions. Let me see, there's a question from Mark Good. Is the content applicable for an initial part-time small business? Absolutely. As long as you're working in the domain of IT or IT-enabled services, that includes internet businesses, mobile businesses, and so forth. But as long as you're working on something that has, it could be a physical product, but if your primary go-to-market on that product is e-commerce and online marketing, then that's fine. So all that is covered. We are perfectly fine with part-time, but we have lots of entrepreneurs doing part-time businesses, lifestyle businesses. All that is fine. We also have a program called the 1 Million by 1 Million Incubator in a Box, which a lot of companies, a lot of our partners are using to run incubator programs within their organization. So we are doing, for instance, programs for Oracle. We're doing programs for Nokia, SAP, a bunch of other different companies. So this is if you're here from a company or a government or an investor group that's interested, or a school, university that is interested in starting or expanding your incubation capabilities and building a deep relationship with Silicon Valley, the 1M1M Incubator Box is a very good solution. This is just a run through of lots of different books that we have published lately. Each of them addresses a specific area. So we have 6 minutes of Q&A time left. If any of you would like to ask questions, you can either call in, I've put the slide up with call-in instructions, or you can use the public chat. If you set the chat to send to all participants and then ask questions in the public chat, I will be happy to answer any of your questions. By the way, further mark on this question about content applicable for an initial part-time small business. We actually have a formal terminology for bootstrapping using a paycheck. So we actually encourage people to start part-time businesses while holding on to a job, and then building it to some distance and getting some traction, validation, and so forth before quitting the paycheck, because that paycheck comes very handy as bootstrap capital. We are the only incubator in the world who's going to encourage you to do this, by the way. Carlos says, my company is just starting and is a social startup. How can 1M help me? We are located in South America. So your company is like any other company, Carlos, that's in our portfolio, and we work globally. So you're most welcome to join the program, and we'll we'll teach you exactly how to get going. How to put one foot before the other, and how to get your how to get your act together, basically. Mark Good says, are you reading my mind? Perhaps. As I said, we've done 210 public roundtables and probably another 150 private roundtables. So yes, I'm reading a lot of minds, not just yours. Abhijit Mandol, is blogging a good business idea? Depends. Blogging in itself is not a good business idea. But blogging as a supporting function to other things, like we have a huge blogging activity, but that is not how we monetize our program. For blogging to be a good business idea, you kind of have to get to a serious readership, and I don't know you to know whether you have the capacity to do something of that caliber. You really need to be a strong writer to be able to develop a following of millions of readers that can actually be a sufficient money-making venture. And it's a very, very cluttered market, so the noise level is very high. Also, it depends on what topic and what is the market size. So off the cuff, I can't answer this question. Again, you have to get into the specifics. Srinath, you just mentioned that the PSA space was not something you were not too familiar with. What do you mean PSA space? It was not something you were too familiar with. HR software is something we are extremely familiar with. Professional services we are extremely familiar with. We have a whole cover. Who said I am not familiar with professional services? I didn't say that even for a second in this session. Where did you pick that up from? We have coverage of professional services and outsourcing on the blog. We have a whole section on that. I know probably every single major professional services company CEO in the industry, personally. I'm not sure where you got that. Where did I? Yeah, absolutely. What I said I'm not familiar with earlier on in Beth's presentation is I don't know who manufactures plastic bags. I have no understanding, no knowledge of specifically which, Chinese manufacturer or Vietnamese manufacturer or whatever manufacturer, German manufacturer manufactures plastic bags. Maybe that's what you correlated with PSA. That has nothing to do with PSA. IT-enabled services is something that I know like the back of my hand. Also blog and blog on apps, how about, I don't know. It all depends on what your knowledge level is. Again, I don't know you, so if you want to elaborate and have a bigger discussion, go do a slide presentation and come and pitch at one of the upcoming roundtables. Okay, Abhijit? Anybody else? Any other questions, comments? If not, we are pretty much at the end of the session. We will get back to you in a few weeks, and actually not next week, but the week after. Good. I'm glad to hear that, Anne. I'm glad you found that useful. So we'll see you all back here on April 10th then, and please, those of you who have found this useful and are working on a business of your own, if you want to come and pitch and go over your situation and get some input, please do, or just join the program and start working, start using the curriculum, and start developing your businesses. All right, folks, thank you for attending. It was lovely talking with you, and I will look forward to seeing you back here on April 10th. Bye.